Today we had some very unique hearings before the Banking Committee. We had Secretary of the Treasury Paulson, as well as the Chairman of the Federal Reserve Board, Bernanke. This is unique, and it gave me an opportunity to really try to resolve a question that I've been asking both Treasury and the Federal Reserve over many years, and that is, who's in charge of the dollar and who's responsible for the loss of the value of the dollar? Generally, over the many years, even before Bernanke was chairman, when Greenspan was chairman, and before Paulson was chairman of Secretary of the Treasury, it was a routine. It was sort of like a ritual. The Secretary of the Treasury would always say, well, you know, it's the Federal Reserve's responsibility. They're the ones who create the money and set the interest rates. But if you'd ask the chairman of the Federal Reserve, they say, but Treasury speaks for the dollar. They have to maintain the value of the dollar, which is really, you know, complete nonsense because it is the Federal Reserve System that controls the value of the money. They are a monopoly. They have monopoly control of money and credit. They set the interest rates, and they work in collusion with the many banks who actually are a cartel. So what they do is very, very important, and what they try to do is have central economic planning through the management of the monetary system, which leads to all our problems. And today, the subject of the hearings was systemic risk, and there's a lot of systemic risk out there, and they're scurrying around on what to do about the collapsing housing bubble and the bad financial situation in the stock and bond markets, and they're resorting to one thing, essentially. They're asking the Federal Reserve first to increase the money supply and lower interest rates, and that's going to save everything. Yet that has been what the problem has been over these many years. But the other thing that they talk about on both sides of the aisle is what we need are more regulations. But what I said in the hearings was that, yeah, I agreed. We needed more regulations. We need more regulations on the Federal Reserve, and we need more regulations on the government, and we need to depend more on the market to allocate resources and allocate capital. But what we have is a system where we expect to have perpetual economic growth without savings. So once the funds that are in the marketplace are loaned out and there's no savings, what would happen in a free market is you'd have to wait for savings to occur and bring interest rates down, and then the investments would go back. But for the last 20, 30 years, especially since Bretton Woods broke down in 1971, what we have done is we have built this huge monetary bubble, a dollar bubble, that has occurred because all the Fed does is create money. There are no savings, and what the Fed does is create the money and the credit and make it available to banks at essentially no cost. Right now, it's the cost of money the banks borrow from the Fed is less than the inflation rate. So it's essentially free. But this is what causes the malinvestment, the excessive debt, and all the problems that we face. And yet all we hear is what we need is more regulation and more inflation. And right now, the plan is to have massive increase in federal regulations and give this power to the Federal Reserve System. Here I'm arguing for regulation by the marketplace and more controls and auditing of the Federal Reserve System, but there's not a whole lot of people interested in doing that because many members of Congress realize exactly what's going on. They like to spend the money and they like the Fed to be there because they don't have to raise taxes. What they do is they get the Fed to monetize the debt, and then they delay the payment and they delay the inevitable. But right now what we're seeing is the collapsing of a bubble, a dollar bubble, and just painting this over with more inflation will not work. But I was very specific with Secretary Paulson's in a question about the dollar because at least the Federal Reserve claims he's supposed to be in charge. And public policy has been, since he's been Federal Secretary of Treasury, has been that we have a strong dollar policy. But if that's the case, he hasn't been very successful. But he shouldn't be blamed. The Federal Reserve should be blamed because of this massive increase in the money supply. Just in the last 3 years, we've created $4 billion of new money as measured by M3. But Paulson said we have a strong dollar policy, and he's supposed to defend that, which makes no sense. But then when he goes to China, He wants a weak dollar policy in order to enhance our exports to China and diminish the imports from China. So you can't have it both ways. You can't have both a strong dollar and a weak dollar. What we need is a steady dollar, a stable dollar. And a lot of people right now are so concerned about the price of oil, and they're talking all about the problems in the Middle East and everything else that causes the trouble, but they never say, is it the dollar? And it is the dollar that is very much involved in the high cost of energy. But of course, the disruption and the turmoil and the threats of our bombing Iran certainly plays a role in the rising cost of energy over there as well. Well, the bottom line is I really didn't get an answer. I kidded at the beginning of the hearings that finally I got the two of them together and we're going to resolve it and find out who's really in charge of the dollar. I didn't get that answer, but I do know who should be in charge. It should be the Congress. Congress has been given the responsibility to maintain an honest monetary system, and they have never been authorized to have a central bank. So, but today that was not resolved, so this will be ongoing. But the fortunate thing that came out of this hearings is that the chairman of the Banking Committee, Barney Frank, did announce that my request for special hearings in a short period of time, probably before the summer break, that we will have hearings dealing with the correlation between monetary policy and the rising cost of energy. And it's something that I think is very, very important. He has acknowledged this publicly, and even after the hearing, he acknowledged that we certainly will have those hearings. So I'm very pleased with that, and I'm looking forward to having a precise hearing dealing with the connection between the debasement of our monetary system and our debasement of our dollar, and as it's related to our foreign policy and why energy prices are going up.